Hello guys and welcome to this YouTube video. In this video I'm gonna talk to you guys about EMAs. I'm gonna cover how the reason I use it and kinda how big players use it, but also relativity and EMAs, how you can compare let's say stocks with EMAs, but also how you can create a system for yourself today only using EMAs. So what is an EMA? Well, for example, here on the chart I have 5, 10, 20 and 50 EMA. A 50 EMA shows how price has been moving on average over the last 50 candles. And on an hourly chart, the 50 EMA reflects the recent 50 hours of price action. And on the 1 minute chart, it reflects the recent 50 candles of a 1 minute. It's that simple, guys. So the reason why I use EMAs is, well, first of all, I have tested it probably over 20,000 times, and it has proven me great results. It helps to see what price wants to do. So what I mean by that is, whenever price is going sideways like this, EMAs is probably let me do like this. Whenever price goes sideways like this, EMAs is probably also gonna go sideways. And whenever price is coming out from this, let's say, range right here, or this consolidation, EMAs are slowly starting to move up as well. So that helps me see when price is ready to move. And the third reason is because it works. And the reason why it works and why I have such confidence in why it works is because I have tested it. I have back-tested this system with other concepts as well, and it works. It's that simple. The key word here is that you should always test stuff. You should always whenever you take something to your system, and it could be, let's say, whenever price moves under the 50 EMA, you simply buy it. Whenever a new thing comes in your system, a new rule, it got to be tested. It has to be tested. And if that's 100 times, 500 times, or 1,000 times, it depends on you, right? Because you need to have confidence in that specific rule. So if you got confidence executing that system with a sample size of 100, that's perfectly fine. But maybe you want to test it 500 times, so you get more confidence. Everything needs to be tested. This can't be based on some gut feeling or some emotional thing. This has to be data proven. That's like a very big part here. So yeah, so big players use it as well. Well, this is my theory. So whenever price, let's say, whenever price has a move from A to B, and we are having this correction to the downside, what big players usually likes to do is the buy orders that came in right here. That's why we're seeing this bullish leg up. They like to reaccumulate their orders on a 5, 10 or 20 EMA. And that's why you usually see, or that's why you can see sometimes, an up move like this, and this up move is continuing. So this small correction here is big players reaccumulating their positions on the uprising 5, 10 or 20 EMA to continue their buying, right? And whenever they are ready to sell everything off, you oftentimes see a bigger flush under some low or down to the 50 EMA. And that usually tells me that there are no big institutions in this market, and obviously we want to be with big institutions because that's where most of the money is gonna be made, with people having large amounts of money, and we are basically riding along with them. So anyways, whenever you see a flush, this is my theory, guys, whenever you see a flush under the 50 EMA or under a low, price resets. And that's and what you usually see here is price going sideways and starts to move again. But of course, this can happen as well. There are no certainty in this market. So yeah, they start to reaccumulate orders here, and the buying starts all over again. Uprising 10, 5 or 20 here, and orders are being reaccumulated, and big banks or big players take their profits up here, and price starts the cycle all over again. So big banks buying, big banks selling. That's why you see a flush to the 50 EMA or a sideways price action, and then the cycle starts over again, because big players are in this market all over again, and the cycle starts again here. Or it can do like this as well. Anyways, hopefully I covered that good. So how does this look on a real chart here? So yeah, so let's take this for example. Prices has made a move to the upside like this, and as you guys can see, if we zoom in on these areas right here, price moved sideways. Price is having an up push higher up, pausing on the uprising 5, 10, 20 and 50 MA, continuing the buying. Same thing here, pausing, and then we start our bullish move to the upside right here. Price, as you guys can see, price doesn't even want to come down, because big players are in this market and they want to take profits higher up. So price is just sailing higher on the 10 and 20 EMA and just continuing going higher. And whenever big players are not interested anymore in this market, they sell their positions from this leg here to here. This is money made. And that's why you see this big flush to the downside right here. Price is reaccumulating for the purpose of probably going up. And then you hit COVID times, someone is pressing the sell button right here. Big player starts to buy these positions right here, and we are surfing the EMAs higher up, right here and right here. And whenever they are finished buying this market, because profit has been made from this place or this whole area to this place, they sell all their positions off, and the market goes down and goes sideways, and money comes in this market again. And same story all over again. Price is holding up and sailing, and price is selling the 5 EMA, as you guys can see right here, and holding up. Price is holding up on the 20 EMA right there and continuing to go to the upside. And same thing here, someone is selling their positions from this place, from this area to this area. Price is flushing down and starting the cycle all over again till someone is selling their positions again from this leg to this leg, and the cycle might start to go up just like this, because this is the history of the market. So yeah, this is basically the structure of the market, and as you guys can see, market moves in cycles. Whenever we flush and create a momentum base to the upside, or this pauses on the uprising 5, 10 or 20 EMA, we continue the buying. Yeah, hopefully you understood that, guys. The next thing I want to take up with you guys is relativity and EMAs. So what I mean by that is, let's say like this. I'm gonna draw for you guys now. So let's say that we have a market that goes like this, and another asset that goes like this. And let's move on. Let's draw on some EMAs. All right. So let's say that this is QQQ and this is Meta. So what I mean by relativity and how you can compare, let's say, the main assets, so in this case Nasdaq with Meta, is, or when I trade stocks, I usually do this to determine for myself where should I be a buyer. So when you see this thing right here, Meta is falling, excuse me guys, let me just write this. This is the 10 EMA and this is the 20 EMA, 10 and 20, right? So let's say that I look at Meta first. Okay, so Meta is in a bullish structure where we are trading higher all the time. We are making higher highs and higher lows. It looks good, right? Meta is pausing right now on the 20 EMA. And if I compare that to Nasdaq here, it has kind of the similar story here. Nasdaq is moving in a bullish way. We're making higher highs and higher lows. But Nasdaq now is pausing on the 10 EMA, while Meta is pausing on the 20 EMA. So what this tells me is that Meta is selling off to 20 EMA and the money just flashes out here and money is getting supported on the 10 EMA. So this basically tells me the story that money or someone wants to continue to buy and hold up these positions right here in order for QQQ to go even higher up, while someone is not interested in Meta anymore. Someone is selling off this asset to buy this asset. So money is flashing up from this and pouring into this. So what I'm trying to say here is you can use the EMAs to compare stocks, but also to determine which asset is stronger. So if Meta is falling down on the 20 EMA and Nasdaq is holding up on the 10 EMA, obviously Nasdaq is much more stronger than Meta. So Nasdaq is basically here, while Meta is here. So this is falling off, selling off completely, while Nasdaq is holding up on the 10 EMA and wants to be bought up. Hopefully that made sense. Let's go into real examples here. So let's take, I don't know, Microsoft and QQQ. Let's be on a weekly here. So yeah, so let's 2022 November. So about these points right there. All right. So guys, create a story for yourself. So now when I compare Microsoft and QQQ, what do I see? Well, both of this market has been trending up. We're making higher highs and higher lows. This is this leg right there, and this is this leg right there, right here. All right. So both has been moving up. We are in a bullish structure, obviously. But the recent price action, and I mean this area right here, Microsoft is selling down to the 50 EMA, while QQQ is holding up on the 10 and 20 EMA. So which one is stronger, guys? Asset 1 or asset 2? Obviously, it's asset 1. So this is what I mean by comparing strength. If this market was as strong as QQQ, we would have paused in a similar way, in a similar fashion on the uprising 20 EMA, as you guys can see here. But no, we're falling down on the 50 EMA. Money is flushing away from this and pouring into this. So if you're gonna be a buyer on QQQ. And you can even compare like the recent move up from this. Let's just delete all of this. Delete all of this. So you can compare this move as well to the upside. So that would be this move right here. So both have been moving in a similar way. Just someone is pressing the buy button. But the reason recent price action, Meta is, or Microsoft is weaker. And you can even compare from this time period right here to there as well. So hopefully you guys understood this concept, how to use EMAs when you're comparing assets as well. And this can be done at gold and silver as well, and GBP USD and Euro USD. It's the same thing. But remember, guys, price action is always king. And I only use EMAs to basically as a tool to help me analyze in the market. So yeah, but with this information you have seen right here, you see whenever prices flushes below the 50 EMA, you can just wait for price to make a move and pass on the 20 EMA, and then you take a buy position. So in this case it would be this. Price made a move higher up, passing on the 10-20 EMA, and continue to go up. Same thing here, price passes on the 10-20 EMA. We got in a position right there, and it's a loss. Okay, so let's move on. So maybe we take this as well, and this as well, and whenever price is falling down on the 50 EMA, we call it a reset. So we wait for money to come in again, so this leg would probably be it, and buy stop that high right there, but we wouldn't get tapped in. And let's see this as well. So price flushes down on the 50 EMA and comes up, passing on the uprising 5. We just simply buy this action right here and continue to buy, and whenever price is flashing below the 50 EMA, we basically stop to look for our trades, because that means that money is not with us anymore. And I don't know, this is kind of choppy, so maybe you continue to buy this as well, and this as well, and this as well, and maybe this, when this fails, you stop looking, and then you start looking here, and here, and here, and here. Same thing here, guys. Whenever price is flashing down and moving towards the upside, you buy this. Let me just do like this. You buy this, this, and now you hold it maybe and have some management rules, and maybe this is a win or a loss, or not a loss, but a win or a break even. So what institutions likes to do, this is my theory, as I told you guys, that they buy up from this 5-10, uprising 5-10 and 20 EMA, and when they are done accumulating orders, price is just flushing down below the 50 EMA, and the buying starts again. And this is opportunity for you guys to make thousands of dollars, millions of dollars, with good risk management, of course. Okay, so I think this was it for this video. Hopefully you guys learned something, and if you have any question, just feel free to comment down below this video, and I see you guys in the next video. Thank you.